all the factors that we're looking at from the fiscal side, the monetary side, and the virus side are actually lining up in support of equities. So just think about what happened with Chair Powell yesterday and the historic announcement that he's actually made about departure from the prior inflation targeting regimes to this averaging inflation concept. What does that mean? That means rates are going to be low, low, low for the foreseeable future. And when you look at the rates markets, we think that's at least 2 years from now. So that is very supportive for the valuations of the broad market. Then you've got this fiscal stimulus and probably more to come that's just been massive in historical concept. The other development that really, I think, added optimism to the markets this week has been on the testing, on the vaccine, and the treatment front. We've obviously seen the Abbott announcement, which I think is a really big deal. If we get quick tests fast, the 15-minute turnaround time, and we can get that at scale, that's a really big deal that will allow us to put the worst of the pandemic behind us. So better treatments, promises of a vaccine by the end of the year, or at least early next year, and this mass scaling testing. I think that's what's lifting the markets higher here. I think all of those things are justified. And yes, it is possible that very, very near term, we are a little bit stretched. Some technical indicators certainly point to that. But any sort of dip that we get would be the one that I'd want to buy.
It sure doesn't feel like Jim Lebenthal that a market like this should be. With an economy like we have, with the virus pandemic still at play right now, a market like this shouldn't just go up in a straight line in a 30 to 45 degree up angle, yet it has. Is there anything that's worrying you right now about what's happening with the market and the dynamic with these fresh record highs seemingly every day?
Well, certainly. And the question is, how broad is this rally? We know that the top 5 stocks within the S&P 500 now comprise 25% of that index. The other 495 stocks actually together have a negative return on the year. Or, if you want to put it in different terms, the Russell 1000 value is down 9% on the year, while the Russell 1000 growth is up about 30% on the year. That sort of narrowness, that sort of dichotomy is not healthy to me. Now, that doesn't mean that we need to see technology and the other growth high flyers sell off. And I hope that doesn't happen. But what I would like to see is some investor sentiment start to migrate towards the other value sectors. You're starting to see it in industrials. That's very good. But you know what? You really need financials to start to pick up some slack here. That broadening of the market would make me feel much better, because underneath that headline of where the S&P 500 is and where the NASDAQ is, the average stock in this market is not doing anywhere near as well as the headlines would suggest.